JJ the CPA here. I want to focus in on this new qualified business income deduction, okay? Now focus in because this is the biggest aspect of the new tax law that you should be taking advantage of. And here's why. 20% of your net income potentially is not taxable. I just visited with some clients yesterday. I got them a $44,000 deduction out of thin air, okay? It's a new tax law, but I knew how to take advantage of it for the client. Now, the first thing to know is that this applies to business owners. So if you're a sole proprietor, you've got real estate, you've got your own practice, you've got investments, here's the thing to know, 20% of it potentially is not taxable. If you've got qualified dividends from REITs, real estate investment trusts, if you have PTP income, publicly traded partnership income, 20% of that is not taxable. I'm going to walk you through this. I've got a video series. If you don't want to listen to it, that's fine. It's a throwaway, I guess, for you, but it's a throwaway for me, $1.70 a video. But here's the thing. When I talk about 20% of your net income not being taxable, that client that we got a $44,000 deduction out of thin air saved them nearly $20,000 in taxes, meaning the bill that they had to write or the check they had to write to the IRS was $20,000 less, okay? So instead of writing a $29,000 check, they only had to write a $9,000 check. And here's the thing, my biggest clients, my best clients owe every single year, but they're not surprised. Here's why. We plan with them throughout the year so that they know what's coming and they only pay in what they need to. So if you got a big refund this year and you don't know why, I got a line item you can check out. Look at your Form 1040, pull it out. Even if you've already filed, you want to be sure we're running out of time before April 15th. Line 9 of Form 1040. Look at that line, says qualified business income deduction. Were you able to take advantage of it? Yes, no. If there's a 0, you didn't. Could you? You might want to check into this and make sure, because here's the thing. When you hit April 15th, you would then have to file an amended return. You might be able to make some changes before then if you haven't filed, if you're getting ready to file. Bottom line is be in the know so that you can take advantage of this deduction. Well, here's the bottom line. You need to subscribe to my videos, right? I've given you valuable information here. I appreciate you tuning in, but here's what I need you to do. A favor, click subscribe, check out my other videos, and then don't you ever forget, you've never met a CPA quite like me.